Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Really excited about the guest we have on the program today. He's a bit of a legend in the mining space and doesn't oftentimes give interviews. His name's Warren Irwin. He's the Chief Investment Officer and founder of Rosseau Asset Management. Warren, welcome on the program.
Well, thanks for having me, Colin.
Yeah, thank you for taking the time out of your busy schedule to talk to us. Just for listeners who are not aware of yourself and your background, I want to spend a few minutes going through how you got so ingrained in the mining space. You're currently managing around $100 million. If anybody's familiar with NexGen, which has been one of the sweethearts this year and last year in the mining space, you are the largest shareholder of NexGen. You own in the high single digits there. But I want to go back to how you got so involved in the mining space, and that all started with Bre-x. We don't have time to really tell the full story here, and our friend Tommy Humphreys over at CEO.ca did a great piece and interview with Warren last year that you can check out. We'll put a link to that at the bottom of the interview. Warren, can you give a brief background on how you made money on the upside and the subsequent downside and fall of Bre-x?
Yeah, well, I guess stepping one step back from that, the whole interest I had in mining kind of started when I was a kid, right? So I grew up all around Canada, but I spent about 4 years when I was really young in Timmins, and the whole excitement of mining and big gold discoveries and the big Texas Gulf discovery of Kidd Creek was really excited me that big fortunes were made. So that really piqued my interest. So when Bre-x came around, that was definitely a very interesting story for me. I just spent some time in Indonesia, and so it just tied in very, very well together. I had some really good friends who were living in Indonesia at the time. I was fortunate enough to spend a month there in the years prior to the Bre-x discovery, so I was able to have both a strong working knowledge of Indonesia itself and the riches of mineral wealth that were down there that I saw when I was there. And then I was also able to combine that with some mining background I had to do some really good analysis on Bre-x. And I did much of the same stuff with respect to calculating an ore model and things like that. And what I was able to do, too, is get in early in the story. It was a big winner, and I was able to actually get to site. And it was really kind of at site and subsequent to that I started to get quite a number of doubts on Bre-x, and eventually sold about half my position for the best reason in the world at around $260, $270, $280 a share when my builder of my house wanted money from me. So I decided to sell half, managed to get really close to the top, and then the subsequent remainder of my position I sold following Mike de Guzman bailing out of the helicopter. And the key thing there is the value of site tours is really, really important, because that's really where you can start asking some of the deep questions. And for instance, when de Guzman did fall out of the helicopter, I actually was in that exact helicopter. I actually knew the pilot. I knew the pilot's background. I knew the safety checks. I knew everything. So I knew that the story the company was putting out was a bunch of baloney. So that was that encouraged me to dump my remaining bit of stock when I knew there's something very seriously wrong there.
And then from there, Warren, you went on to, if I'm correct, actually go ahead and short Bre-x and profit from the collapse and fall of that company. Is that correct?
That's right. Yeah, I made a bunch of money on the way down too. The key is, as many of your investors know, it's way easier to make money on the way up. I caught the stock at $18 and I sold it probably on average around $220, somewhere in there. Whereas when you short stock, the most you could do is make, if you short $1 worth of stock, the most you can make is $1. So I prefer to make money on the long side. It's a way to make bigger money, but I was able to short Bre-x in the high teens, and I covered it at 9 cents.
Fantastic. So then in 1998, you founded Rosseau Asset Management, which I believe started with about $3 million. And through that epic bull market that we had from 2000 to 2007, and then an extension of that to 2011, you managed to grow Rosseau to over $275 million. I want to ask you about that time period. It was a great time to be investing in the mining space in the junior sector. Maybe just highlight those years and what you were looking for, some of the successes you had during that epic bull market.
Yeah, one thing I remember when the market started out, it was kind of like the market today, where when you look around today, in general, very general terms, the gold companies out there or the resource companies out there are generally good, because all the lousy ones have been blown away by the market. Nobody has funded them. And with a lot of the sources of funding gone, for instance, the majority of my competitors are no longer in business, and hence companies that don't have very, very strong fundamentals are just not getting financed, so they just go away. So right now is very similar to what it was like in the early 2000s. And in the early 2000s, there were a number of there's just a handful of really good companies left, really. And one of them included Guyana Goldfields. That's the one I first remember getting involved with. And I remember Pat Sheridan from the mid-'90s when he was just starting out with the Peters mine and trying to make that a go. And then I followed him through the collapse, and then I followed him at the other side. I wanted to back him, so I was able to back him in the early 2000s, and that was a huge win for me. In fact, I think all said and done, we made 37 times our money on that original investment.
That's fantastic. And there's a quote that I saw. You said, "It's my view, generally the best time to invest in a junior is after the discovery is made, but before people have figured out it's a big discovery." I don't know if that's a philosophy you followed ever since the beginning of founding Rosseau Asset Management, but it's certainly one that you've been pretty vocal about in regards to NexGen energy since last year. Just for listeners unfamiliar with NexGen, they recently came out with a very substantial resource estimate at their high-grade Arrow asset in the Athabasca Basin. And a lot of people several months ago were thinking there would maybe be 50, 60, 70 million pounds of uranium. Warren was the one voice coming out saying that he thought there was probably 200 million pounds. Just incredibly accurate that when the resource estimate came out, you were only about 2 million pounds off. It came out at 202 million pounds of uranium in the ground. So talk to me a little bit about this idea of getting into a junior where the discovery has already been made.
Yeah, there is in my experience, and I'll just give you a quick summary of some of the ones that I've been involved in. We talked about Guyana Goldfields, but also the Aqualine discovery, the Navidad silver deposit in Argentina. We've been involved in Virginia, Gold Eagle. We're one of the biggest shareholders in Irwin. That was the big discovery of the Fruta del Norte in Ecuador. So we've been involved in lots of new discoveries. And one thing I noticed, especially in times like this where people are not necessarily in favor, there's no hype in the gold sector or in the mineral sector at all, really, is when a company makes a big discovery, there are a number of people that follow the company closely, but generally not that many. And the stock will pop on the original discovery, and because all those people will commit more capital to it. And then after a while, there's a bit of a lull where you basically got an education process where that company needs to go out and start telling the story to get it around to people. And there is often times a really big lag between a discovery and people actually factoring that discovery in the valuation. And we saw this when I look at the biggest lags I've seen are generally in the biggest discoveries. And the reason for that is if you made a discovery, let's say tomorrow, of $2 billion worth of ore, like not in situ value, but let's say the fair market value of the company started out as a $10 million company. It made a discovery, and you could write a report saying it's worth $2 billion tomorrow. Well, it does take a long time for the market to realize that and grind it all the way up to 2000 because to $2 billion market cap, because it does take a lot of education, takes a lot of people to realize what's really going on here, to everybody to do their work. So there's quite a bit of a lag. And the bigger the lag, the biggest lags actually come with the biggest deposits. Early in my career, I remember seeing Voisey's Bay, and that was a situation where you found this massive silver deposit by Robert Friedland. And Robert was going crazy in the early days. He had a $300 million market cap, and he knew it was worth many, many multiples of that, yet nobody else saw that. Nobody else, at the time, Robert was getting a lot of grief for the galactic issue he had with the spill he had in the northern U.S. with the galactic mine, and then he was also getting a little bit of grief on a few other issues. But the other thing too is you were finding nickel in a whole new region, so there's a whole bunch of questions there, and that really led to a very slow start. So there's a huge gap in there for somebody who got in early, did the work. They were able to get into Voisey's Bay stock, which was Diamond Fields, really, really cheap, and those people made out like bandits.
Well, there's that well-known exploration to discovery to production curve that a lot of these junior companies always show in their presentations, whereby the best place to invest is before the discovery is made, but it's also the most risky and speculative spot to get in. But Warren, your investment strategy seems like it may have more merit in that there's already a resource or a discovery in place that's known by the market but not properly valued. And I guess, in a down cycle particularly, that mitigates your risk in holding these companies that actually have something tangible. Is the hedge or the downturn that might come something that you consider in taking that strategy?
No, I do agree with that view. That kind of summarizes it very nicely. There is a real inefficiency there because I don't think there are a lot of people waiting on the sidelines, especially these days, to jump at an exploration story. When the market's really hot, as it was some years ago, sometimes any whiff of a discovery, people were all over it so quickly. It got valued very, very high, very, very quickly. But fortunately, today's market environment for the smart investor, companies out there making discoveries, and especially in the case of NexGen, you're dealing with a situation where all the numbers are there right in front of you. You do a little bit of work, and you'll figure out that the stock has a lot of room to go, and that the deposit's probably going to grow substantially from where it is today.
Yeah, now I want to start honing in more on uranium, and typically I would start with the commodity and then focus on a particular company, but I want to do that in reverse today and start kind of talking about NexGen and then moving out from that. Warren, when did you first start taking your position in NexGen? Why, and what allowed you to see what other people were not seeing at the time?
Well, I first visited the site in sort of the fall of 2014, where they just started drilling, and I had a bunch of shareholders in it were hounding me to go and see it, so I jumped on a plane and went out to see it. The key takeaway from that visit was that Lee Currier and his team, including Garrett, were a really, really strong group of people. They were running a very professional program, had a very professional camp, and everything looked very, very good, and they were lining themselves up for a discovery if there was uranium down below. The key takeaway I took there is there were a number of people on the trip with me speculating that they had a really big discovery, but I really hadn't seen any definitive signs at that stage. So I sat back and I started watching it very, very closely. So then when they started getting some exploration success in 2015, I gradually started looking at the company again, and little by little they just kept finding more and more, and it was starting to pique my interest because it was important for me to have. I really enjoy the most the companies I really, really like and getting involved in are world-class discoveries, the ones that you know are going to get taken out by majors because they're just so big and so strategic. And it was clear to me that NexGen had a shot at this. My initial reluctance, though, towards getting involved in the stock sooner, too, was another issue, which is I believe there was a hung equity deal I didn't think got placed too well, and I think some of the dealers still own some stocks. That had me concerned a little bit. And at the time, too, I know some of their big investors are having financial difficulties. One of them was Pine Tree Capital. So I was concerned about the Pine Tree stock coming out. I was concerned about this overhang, and I also knew of some other large shareholders who were having financial difficulties in the meltdown. I thought those shares were going to hit the market. So I was reluctant at first to get involved. And then as they started putting out more and more drill holes, I stepped into the market and I was able to clean up some of the loose stock that was in the marketplace. And since then, it's other people have started to see what I originally saw.
There are two, what I would call really exciting stories that have gotten love from the market in the last year in the Athabasca Basin that are uranium focused. You, of course, have Fission's Triple R deposit, and then NexGen, as we were talking about, the Arrow deposit. And, you know, just as a point with Palisade Radio, we talk to everybody. We get all the different opinions. We've had Dev on the show with Fission, and we probably will get Lee on with NexGen at some point. What merits do you see quickly of NexGen versus Fission? You know, you've obviously picked to invest your money in NexGen, and some other people have picked to invest in Fission. So what are the pros and cons there?
Well, first of all, I really don't think there's much comparison between the two deposits, other than they're sort of in the same area. In fact, they're neighbors. The key takeaway from me when I'm looking at NexGen is that it's very simple to mine. They're in the basement rocks, unlike the McArthur River and Cigar Lake of Cameco, where they're in sort of in the quasi-basement sandstone, where there's tremendous water inflow issues, and they have to freeze all the rock to get at the uranium. This is at NexGen, or the Arrow deposit, is very simple mining. It's in the basement rocks, so it's like a traditional mine. You need to have additional ventilation and a number of other safety measures too, given that you're dealing with uranium. But it's very, very simple to mine. And I really like the management team, good, strong, credible guys. And the similarities to Fission is, of course, they're in the Athabasca Basin, which is a Saudi Arabia of uranium in the world. It's one of, if not the absolute best jurisdiction in the world to find uranium. And with respect to what I like about NexGen over Fission is one thing I've really tried to do in my career is I've stayed away from a number of issues, and one of them is difficult mining situations. I try and stay away from those, and difficult metallurgy and new processes and stuff like that. I don't like to reinvent the wheel. So when I look at what NexGen has over Fission, the biggest thing I see is it's just easier to mine. When I look at Fission and look at having to build dikes, I really don't like having to build dikes. They're quite a bit of work, and actually the dike they need to build is quite big. And then from the bottom of the pit, they need to go underground. And then there's other issues surrounding what happens to radioactive dust, what happens to all the rainfall that falls into the pit. There's a lot of water you have to purify and get the uranium out of the water before you can discharge it. And you're dealing with, you've got a dike and you've got fish on the other side of that dike. I just don't want to deal with all those hassles. I think what will happen with Fission is over time, as they drill out their discovery, the bells will ring, and they will know exactly the best way to mine that. And I don't think it'll resemble the current mine plan they have. I think the deposit will tell the owners of Fission how to mine that. And it may not involve dikes at all. It may involve the simpler dikes or something. But I think there needs to be a better system to mine that, and I think that will become clear to all investors over time. So the essence of it, the thing I really like about NexGen is I think it's a lot bigger. It's easier to mine. I like the team there. I think it'll be more of a strategic asset than Fission's, and but mostly it'll be a lot easier to mine, in my opinion. So I have a preference to NexGen over Fission, but in the end, having another uranium company in the neighborhood is not a bad thing. I think what both Fission and NexGen have shown the marketplace is that there will be a new frontier in the Athabasca Basin, and it's around that epicenter of those two discoveries.
Thanks for that, Warren. In terms of investment strategy, investing in a best of best asset, and we could throw NexGen in there, meaning large scale, high grade, proper jurisdiction. You don't necessarily need to be in a strong commodity market. Uranium right now has been and is in the dumps. Some of the stocks are starting to get a lift, but the price of uranium is actually down over the last couple weeks. However, I do believe that you're bullish on the outlook for uranium. And of course, if you can couple an investment in a great company with an upturn or an upswing in a particular commodity, that's how one can make a fortune. Talk to our listeners a bit about what you see the outlook for uranium like.
Yeah, and it's a very good point you make, that you can make a ton of money making a discovery in a lousy metals market. The analogy I draw to that is Voisey's Bay discovery was made when the nickel market was pretty crappy, and there were billions of dollars made there. NexGen, as luck would have it, made a very, very large discovery in a lousy uranium market. So I think there'll be lots of money made with NexGen if the price of uranium hovers where it is today, just due to the fact that it's extremely large. The project is very, very robust and has a strategic nature to it. Now, with respect to the real super-duper home run here would be we also get a little bit of strengthening in the price of uranium. Uranium has been in the dumpers for quite some time. I know I've watched Tim Gitzel from Cameco speak about uranium. He has obviously more data to work than I do. He's a little confounded too, I think, with respect to how long this uranium downturn has lasted. The trick with uranium in predicting anything is it's not a typical supply-demand equation, where right now about the key tricky part of forecasting it is you've got, on the demand side, you've got tremendous increase in demand with basically you've got 66 reactors under construction right now in the world off a base of about 437 reactors, right? So that's a pretty significant increase. And the important thing, too, is these new reactors are generally larger than the older reactors, so they're going to use more uranium. Also, when you start up a new reactor, it uses about double the annual fuel usage just to fill up sort of the gas tank in the reactor. So there's a big build going on, and especially China. China right now has 30 nuclear plants in operation. They have 24 under construction, and they have lots and lots more planned. So the outlook for the demand is tremendous, and especially from China. And that's why China, the Chinese had made that investment in fission, because they're very keen to get hold of uranium production. On the supply side, Tim Gitzel from Cameco talks about how there really haven't been a ton of new mines being built in this environment. Generally, in a lousy price environment, there aren't a lot of mines being commissioned. So his view is, for any substantial number of mines to come on board, to meet this increased demand, we're going to need $60, $70 U.S. Prices for uranium. Now, the real kicker here, though, and the big unknown that neither the head of Cameco, myself, or anybody else really knows, is a secondary supply into the market. And that's from people that currently have stockpiles that are just selling those stockpiles on the spot market. For instance, there is some speculation that some of the Japanese power companies have excess uranium that they haven't been using in the reactors since they were shut down after Fukushima, and they might be lightening up some of that in the market. There's also speculation that the Americans are selling some uranium into the market to help fund some environmental cleanups. And there's also speculation, to what extent, I don't know, that some of the weapons-grade uranium is being downgraded into reactor fuel too. So about 20% right now of the market is being supplied by the secondary sources. And these secondary sources don't always have price points, and they sometimes have other reasons to be selling into the market. So that's really the big unknown. But the key here is, as time goes on, the gap between current production and consumption increases and gets increasingly wider. And people are speculating that this secondary supply will not be growing sufficient to fill that gap. So we basically need more production. And the wrinkle there is, if we do need more production, let's say in about 4 or 5 years' time, we've already missed the boat, because it takes about 8 years to build a new nuclear power plant, or sorry, not nuclear power plant, but to build a new uranium mine. So sure, existing mines could crank up production perhaps to meet some of that gap, but there needs to be new uranium mines to fulfill this future demand for uranium. And they're not currently under construction, really, to any great extent. So people believe there will be a pinch point here at some point where there will be a gap up in the price of uranium as as the needs just aren't being met from the mine production. And there's a whole bunch of other wrinkles. It gets very, very complicated very, very quickly, because but I won't go into it further with you guys right now on that.
Well, correct me if I'm wrong, Warren, but anytime you're looking at the potential upside or downside for a commodity, you're weighing pros against cons. So as an example, we had the terrorist attack in Brussels that probably had no effect whatsoever on the uranium market, but there was a slight scare in that the uranium power plant near the attacks were they pulled the workers out just out of fear that there could be a problem there. Japan restarted 4 of their reactors so far, and 2 of them were just pulled offline by the court system, so that might slow the restart down. But then on the positive side, you just outlined a lot of great factors, and before the call, you even mentioned an article you saw in the China Daily regarding Rio Tinto maybe getting involved. I guess my question here is, there's always negatives and positives, but you think the positives far outweigh the negatives at this point and where we are with the price?
Yeah, absolutely. I think probably the best summation of my view on the price of uranium is it's difficult to see the price of uranium for any length of time getting much lower than it is today. But there is definitely a very, very good chance, I think, of a spike upwards at some point. The timing of that is very difficult to predict. I know that other people before me have tried to do that and have been unsuccessful, but I think at some point down the line, I think most observers believe supply will be getting a little bit tighter as demand starts to grow. And the important thing here is when you build a reactor, the cost of the fuel is really not the cost of the operations. It represents a very small cost per kilowatt hour. The key there is the capital. And so if you've got a large capital investment in a nuclear power plant, you want to make sure you have a secure supply. So as these new reactors under construction start spooling up, to the extent they have not already locked up supply, the operators will have to lock up supply on a term basis, and eventually that crunch time will come. We do need higher prices to get more mines in operation, and there will be a crunch point. And what's interesting about Arrow is, based on our numbers here, Arrow would make a ton of money even at today's lower prices too. So I do believe in about 8 to 10 years time, Arrow will be producing a ton of uranium, and hopefully by then, I think we'd have a very, very robust uranium market.
Well, as we move towards a conclusion on the interview, I want to bring things back to NexGen. You're still a holder of the stock. You initially modeled that 200 million pound deposit quite accurately before the actual numbers came out just last month. Where's the company at now? Have you made any future or further projections based on recent drilling of how large this deposit can get? Could it become, a largest deposit in the world?
Well, I think right now, I think everybody would agree that NexGen right now is the best undeveloped deposit in the world. Based on the drilling that's been released with assays since the last resource estimate, I've updated my resource estimates, and it sits right now at about 270 million pounds. There's 2 sets of assays that have been released that have not had 2 sets of results have been released without assays, but just scintillometer results. I have not factored those into my numbers, but I think once I do, and once those assays come out, it's pretty easy to get through 300 million pounds. So when you're looking at NexGen, I would use 300 million pounds. When you're looking at, post-Fukushima type acquisitions of pounds in the ground, you're looking at roughly $4 US a pound, or let's say so $4 US a pound, 300 million pounds, and those 300 million pounds are pretty easy without making any grandiose assumptions. And if they are doing some serious step-out drilling that could really, really add to that 300 million pounds. So you're looking at $1.2 billion US market cap, and the stock right now has about a 385 million Canadian market cap. When you net that at cash, it's only 350 million Canadian. So the stock has a lot of room to run. It's worth multiples of where it's trading today just based on what they've already found, and that anybody doing the math could figure out pretty much on their own. So that's one of the reasons NexGen is such a tremendous stock right now, in my opinion, is that it should be trading at multiples of where it is today based on what they've already found, yet they have quite a momentum behind them as far as their discovery momentum, and they have some really good targets they're going to be drilling here going forward. So you've got tons of downside protection and some really good upside based on what they've already found and drilled out. And then you've got some blue sky, both in terms of, like you'd mentioned, possible improvement in the uranium price, but also possible discoveries both to the northeast and to the southwest of the Arrow discovery. There's some really exciting targets there.
All right. Well, Warren, I've really enjoyed this conversation. We're kind of out of time here, but hopefully we can get you back in the next couple months because while uranium and NexGen are one of the focuses of your group with Rosseau, you also have detailed offline with me some other opportunities in the oil, zinc, and gold space, and hopefully we can find out some more about that when we have more time. Warren, thank you so much for coming on the program. Any last details you'd like to share or ways that listeners can get in touch with you and find out more about your group, please add now.
Okay, well, yeah, we're available on our website, www.rosseau.com, and I try and give my views as often as I can on NexGen. One of the reasons I'm doing that, obviously, is these opportunities don't come around all that often in one's career. And, I think we have a lot of really fun stuff to look forward to. With respect to the markets in general, especially in the resource side, everything's beaten up pretty badly. But specifically within that, I think any of your investors should definitely take a very close look at NexGen, get comfortable, and have a view on it one way or the other. And I think I know which way their views would be. But anyways, thank you very much, Colin, for your time, and I do look forward to chatting again soon.
All right, thank you so much for coming on the program, Warren.
All right, bye now.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?